Thank you, Mr. Chairman. And Mr. Chairman, the end is near. Thank you for hanging in this morning. I would echo what my colleague, Senator Moran, just said. We actually have legislation to try to promote the startup activity, Startup 2.0, which addresses the very issues you talked about, as well as the issue of talent. We're in a global competition for talent, and I commend Senator Moran's leadership on this issue. We did make some of the movement on the access to capital earlier. I'd also, I know most of my colleagues have left, but would point out for some of my colleagues that because of the actions we took as this Congress and Dodd-Frank and otherwise, we have seen an increase in capital on American banks in excess of $300 billion more in capital reserves since the crisis, and clearly I think that has helped our banking industry relative to some banks who are under assault around the world. I also want to commend you for your continuing urging of us to act on fiscal policies. Waiting for Congress is a little bit like waiting for Godot. Hopefully we will see some actions later this year, and a number of us have been working on this. I guess one of the things, my first question would be, as we grapple with this issue of trying to get an appropriate balance of revenues, entitlement reform to generate at least that $4 trillion to drive our debt to GDP ratio back down, and because, as you've pointed out, we can do this on a moderate, we don't, or a intermediate basis and have the ability to phase these things in, I sometimes scratch my head because what would be asked of the American people is so much smaller than what's being asked of the folks within the UK or folks within Europe or even folks in India and elsewhere where they are going through policy changes. Have you done any kind of sizing of what a $4 trillion deal relative to the size of our economy and the ask of the American people versus what is being asked of folks all around the rest of the world as they try to move forward and get their own fiscal houses in order?
Well, a number of I haven't done that exercise exactly, but in terms of percentage of GDP, some of the fiscal shifts that are taking place in countries like Spain, Portugal, and Italy are very substantial and in the near term, which is part of the reason why their economies are so weak in the near term. So it's certainly true in terms of the fiscal step that's being taken. It's larger in these countries which are under fiscal stress, but I'm not quite sure what the implication of that is. We're lucky that we can borrow at a very low interest rate. We're not currently in the same situation as a Greece or Portugal, and therefore, if we can intelligently combine a gradual glide path with a strong, credible plan for stabilizing our deficits in the longer term, we can avoid that kind of painful contraction and do it more gradually.
It almost seems to me that it is remarkable, and I think this is why Congress is at record low levels of approval, that we can't step up, almost un-American, that we can't do our job relative to what is being asked of other people around the world. One of the things that I know we've had some policy debate this morning on additional actions you may take to stimulate the economy. I guess one question I would say for those who've questioned taking these actions, if we look at the European Central Bank's recent actions in terms of, if we look at the Bank of England, if we look at the Chinese financial institutions, what effect of their stimulus activities or loosening activities does that have on the world economy and in terms of your decision making?
Well, there's been a global slowdown. A lot of it's emanating from Europe, which through export demand is affecting Asia and other parts of the world, United States as well. There's been some slowing in Asia as well. The Chinese GDP statistics have been weaker this year than in previous years. Partly that was intentional, as they sought to cool their housing market and to address inflation concerns. But there is a slowing in the global economy. To the extent that actions taken by our trading partners strengthen those economies, it'll help us on the margin because it'll increase our markets and provide an overall better economic environment. But I would say at this point that compared to what we saw during the aftermath of the crisis, nothing is happening globally of that kind of scale. I mean, there's relatively modest steps being taken in both of those jurisdictions to try to offset some of the slowing.
But those actions are similar to what you may take in the Fed. And I guess the point I would simply make is that this is there seems to be a consensus opinion around major economies around the world to take these type of stimulative actions.
The world is in an easing cycle, that's correct. And in terms of the specific actions, the UK, for example, just has been adding to its quantitative easing program and doing other things as well. So the U.S. should be very clear, the United States, the Federal Reserve is not the only central bank that has been using these unconventional policies as a tool for trying to strengthen their economies.
Thank you, Mr. Chairman.